So here we're going to go abroad and look at what is happening in the global market and how the U.S. is fitting into that, because obviously with what's happening with Russia, Ukraine, there is those shifting tides, which we discussed in segment 1. So when you look at what has happened so far, you have Gallup, a Portuguese firm, they're again suspending new purchases of oil products. Again, it's important to appreciate new, what has already been purchased and en route and what is yet to be loaded. So one of the things that we continue to see is people or companies or countries are going to take delivery or try to sell them as quickly as possible in case there are sanctions. But right now, there are no sanctions on the oil side, the product side. And that's something that could change, but it comes down to letters of credit, the things that we discussed in the Frac Spread Show. So one of the things, the global crude oil on the water, you can see that we're right at 2020 levels, which is, when you look at it seasonally adjusted, at near all-time highs. Obviously, 2020 had a very unique year, especially as you had that outcropping of, because this is right when you start to see that big increase in COVID cases and some of that panic when you look at what has happened in both Asia and then obviously in the Americas and Europe. So we're at that elevated level. It's a mixture of what is in transit, what is in floating storage, and what's going to continue to move. So when you look at what's in transit, outside of 2020, this is the highest ever. That's going to remain the case. We have more cargoes going in motion from West Africa, even though they're at a seasonally adjusted all-time high and actually near a 2022 all-time high of what's in floating storage. That's starting to move. Nigeria is going to Europe and to the U.S. Angola is still starting to sell, and a lot of that is still going into Europe, with some going on just what is normal and allocated towards their Asian buyers, mostly being obviously China. So the cargoes that are in transit are going to show up in Asia, which is why we keep talking about how Asian floating storage, we expect it to just average flat from where we are. It may go down a bit, it may go up a bit, but just in terms of the averaging it out in terms of timing delays, it's going to remain elevated and it's going to stay at that position because of when you look at floating storage, we're at all-time highs. That's a seasonally adjusted all-time highs. We're above where we were in 2021, and we expect this to remain the case. And for a lot of reasons. One, you have just a lot of crude on the water right now as it's trying to compete. You're going to get a lot of different shifts as countries and companies opt to not buy from Russia. We have CPC that came, another offer that was $7 below dated Brent. You're going to continue to see just what does it take to get some of this clearing. And right now, when you look at Urals, they have gone no bid, which just means that there is no price someone's willing to pay. The most recent offer that was out there was $18.60 below dated Brent. Then we saw it bouncing around. It went from 18.6 to about, to 16. And it's just, it doesn't matter. There's no one that's willing to buy right now. And that's also going to leave crude on the water because they're loading. So at what point are you going to start seeing run cuts in Russia because they don't have a whole lot of storage? And if you can't put it on the water for fear of an attack or a missile attack coming from Ukraine, in the Sea of Azov and more importantly in the Black Sea, that's going to make it very difficult. So again, those are going to be some of those different pieces, not to say that they will, but just in general. So that's going to be a bit of a concern as they continue to try to ship it across Russia and into the eastern part of the country and down into China. Because right now, China has said they will buy. And we'll talk more about what is happening on the CIPS. I did a podcast on it, which I'll share with you once it becomes available, and just in terms of SIPs and what can be done. As the sanctions increase, India has done this before, especially for Iran, where they essentially set up an account at the RBI, or their central bank, where you look at, as they buy, as India buys as Russian crude, whether it be Urals or other, they will then essentially credit this account. And then the credit will increase, depending on whatever the going rate is. And let's just say it's $300 million. So they'll credit the Russian account $300 million. And then Russia will buy whatever that could be and then they'll debit against that, whether that be grains or fertilizers or products. And you'll see that managed, where in China they can actually cross in terms of between the ruble and the yuan. But the problem with the SIPs and what should the ruble be? Like, what is the right exchange rate? Because there is a lot of issues in terms of what that exchange rate is. You know, do you back it against their commodities? Do you back it against their gold reserves, their foreign reserves? So again, even though they can do it, are they going to accept, and what should 1 ruble be in yuan? And I think that's going to be some of those underlying issues. So now when you start looking at what has happened in the U.S., when you look at floating storage, which is going to remain elevated, when you look at what's coming from the U.S., as we were saying, gasoline flows will remain fairly flat. It was down 25,000 barrels a day, 60,000 below the 5-year average, which we think will stay below the 5-year average. Distillate fell 211,000. That's 290,000 below the 5-year average. That's going to be under pressure because it's better to sell it here than abroad. So that's something that we don't see changing. And then when you look at propane, right in line with still being very strong, up 8,000 barrels a day, but still 308,000 above the 5-year average. It was the increase in oil exports. You had an increase of 1.11 million. That's so again, that brings us to 3.796 million barrels a day. And you had a lot of this move going into Europe. That's going to remain the case. So as if you remember, we were saying it was going to be between that 2.7 to 2.8. Now, just based on what we're seeing, some of the demand, it'll probably be much closer to about 3 million. We'll get a drop just because, again, it's that timing delay, but you're going to see a lot more demand going into Europe. It could be worse. And the reason why it's not in terms of, or should I say it could be more, but you do have refiners that are in turnaround season. So because of that, you're going to get some of that demand coming down, which will offset some of those different pieces. Now, when you look at gasoline exports, as we were saying, it's going to be in the cloud, but at just below that 5-year average, we don't see that changing. When you look at what has happened in distillate, it fell. It's still staying within the very low end of the cloud. We expect it to stay within that low end of the range. When you look at ethane, again, still staying strong. We see that remaining well above seasonal norms, especially as more of this product gets pulled into China. And then when you look at crude oil exports, you can see that nice little surge. But when you put it on the 4-week rolling average, you can see that we averaged 2.963 million. And we think that we're going to stay at this elevated level and be much closer on average on that 4-week rolling average to that 3 million mark, given the loss of product coming from Russia into Europe, and then they'll look to replace that with Libyan crude, Nigerian crude, and obviously U.S. flow. Propane still staying strong. We don't see this staying any different. The problem is going to be that Russia also exports, obviously, not only just oil, but also condensate. So when you see condensate getting taken out of the market or struggling to sell, what is that going to do to the petchem market? What is that going to do to the LPG? That should increase LPG demand. That should increase the demand for U.S. condensate. But Iran also has a lot of condensate. What does that do to Iran? Does that pull some of that additional condensate into the market? And does that become an even bigger incentive on why we get a deal sooner? Looking at dated Brent, you can see that we're just soaring. We're now over $15. We reached closer to about 20. That's something just in terms of when I snagged this. So again, this is going to make the Dubai swap better than that dated Brent, just because, again, incentivizing the movement from the Middle East. You will get a little bit more of those production levels. You also you're still in that lull period in terms of when they start turning on more electricity demand for heating, for cooling. So that will, again, keep some of those flows moving into the broader market. Now, as we said in segment 1, you can see Russia was set to put out about 4.176 million barrels a day in flow. So we do have those increases. Nigeria and Angola continue to take higher their exports for April. We expect that obviously to continue, especially as we're getting new cargoes added, just because it makes sense at this point, not only just because of price, but also because they're finally starting to see some of that crude clear. North Sea is going to stay elevated again. A lot of that's going to stay local because when you look at dated Brent, Europe's not going to have a huge amount of competition because you're not going to have Asia buying from Europe. It's just that they've already loaded some cargoes; those will flow, but you're not going to see another big increase. It's going to be fairly fixed because Asia, for the most part, is going to look to buy from the Middle East, just given where some of the flows are. So that's going to be something to watch. When you look at where things are right now, crude and condensate exports from West Africa rebounded in February and will continue to rebound in March and then again in April. And that's one of the things where when you look at what has happened so far, so Eni offered 90,000 tons of CPC blend, delivered at dated Brent of minus 7.35 off of dated Brent. So again, the offer price was the lowest since March of 2020. We expect to see more discounts coming through. Glencore offered 85,000 tons of CPC at $6.65 below dated Brent. You're continuing to see a lot of these pressure points coming through. And that's, as we said, with Urals going no bid, that's going to continue to weigh on where the market is and what those shifts look like. Now, when you look at what happened in Europe, you can see that there was a big drop in European storage, not below where we were to start out 2022, but you can see we're at the low end of where we were in both 2016, above where we were in 2020, but we do expect this to bounce back up as you have some of those movements between floating storage and onshore. Now, when we look at what's happened in Fujairah, total oil products fell by a small amount. They fell by 94,000 barrels. In general, middle distillate and heavy resid posted draws, which were largely offset by a build in light. Light distillates increased by 700,000 barrels. Again, the East of Suez gasoline market remained fairly stable. You're getting a bit more demand because of some of the restrictions from COVID travel is now being lifted, but you're also getting some additional exports into the market, and they're actually coming from China. So that's kind of mitigating. So physical gasoline cracks were seen moving up with the FOB Singapore 92 RON gasoline crack against front month. The pressure is going to be on where some of these numbers are. And as we've been saying, we expect light distillate to remain elevated on a global basis and not just in one location. While middle distillate, which we're going to talk about right now, fell by 115,000 barrels. And again, we expect middle distillate to stay very strong. It's very tight in the market. Now you're going to take a lot of middle distillate from Russia out of the market, which is going to make this market even tighter, which is why we do see more and more from China getting moved into the market, and we should see some of those exports increasing. Resid fell by 679,000 barrels. That's something where we do see some of that increasing as well, because as middle distillates get a bit more expensive, people again fall down and go to the lower product. And that will support some of those residual and heavy distillate moves. Again, some of these things, as we look at net total, we expect this to be slightly elevated just because light distillate will be the driver. But again, something that's going to be something to watch. You can see the Brent time spread has exploded. That's something that it's going to stay elevated just given where we sit today in the market, and we don't see that changing anytime soon. China's super tankers, as we said, crude imports, what you were actually right at 2021 levels. We're going to stay above 2021 levels. And this is because you did have a lot of buying in front of demand as we had some of those increases coming into the market, just again, coming out of Lunar New Year, coming out of some of the COVID increases. COVID cases are increasing, but we do see them being a bit softer, which again is going to keep some of this crude flowing. Asia floating storage, seasonally adjusted all-time high. It's above where it was in 2021. We expect it to just waffle back and forth and just hug the top end of this range, or I should say hug where it was in 2021. As you have more crude in transit, going to show up in Asia, struggle to have that timing delay of getting onshore, and that's going to leave more on the water. North Sea, a bit of an increase. Again, this is timing. We expect this to flow more of this into Europe just because you're not going to see a lot of competition for it. West Africa, a big spike in floating storage. This has since started to abate. Again, this is because of Russia. This is because of the Russia-Ukraine situation that's, again, attracting more buying. There's still a lot available between what's in floating storage and what is being produced and put onto a boat. But again, that we're seeing more bids for that right now. Middle East is right at the, it's still a little bit elevated in terms of what's available. But again, we expect this to clear quickly as more of this gets pushed into the market for, especially going into Asia, and some of it going into both the US and Europe. And then European floating storage remaining near new all-time lows. We expect it to stay near all-time lows. Then when you're looking at some of that bounce in Asia, here's the teapots coming back. We expect it to continue to come closer to what the average is, and then above that average. But if you remember, quotas were already filled. That's going to limit how much new product comes into China, which again is going to keep things fairly elevated. Activity fairly depressed and storage fairly elevated. So that's what we have for you today. Hopefully that was helpful in terms of where we sit right now. Where are we going forward? And now tomorrow we're going to have our macroeconomy show, again, talking more about what is happening in the market today and where some of these shifts are coming from. So if you need to reach us, you can reach us in the comment section. Again, I'm very active on Twitter. And as always, thanks for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.